Another viewer request, and Apple aapl, that is on the Nasdaq technology, okay, industry, phones and handheld devices. We got to always look at the higher prevailing trend, the monthly chart. You got to do it. You got to see what's up with that. Did we hit a breakout? Is it still an uptrend? And I could remove the price action. Just look at the 12-month moving average. And that's a long time here. That's like a year. 1, 2, 3, 4. So that's a good time you could be in the trend. So even if it's going down on the monthly, this is a very long trend. Even this one is playable on the weekly when we zoom in. And look at that, man. Apple has been intense. What? Look at exponential here, right? Oh, it's too high. Well, just needs a little time to go back down. So when you say too high, I say as long as you're above the 12-month moving average, it's not too high yet. You know it's too high only when you start going down, right? You never know what's the high until you go below it and say, oh, okay, that's the high. That's what I have to overcome. I have to go on top. What you do know is when you have a high, but it's so far away from the 12-month moving average there. See here, it's hogging it, coming and testing it, coming and testing it, coming and testing it. When it starts going away from it, eventually, that means you're going parabolic. Eventually, it's going to pull back down. Doesn't mean it can't continue in that crazy... let's do it like that. See, it's starting to go away all the way up here. Moving average is below 60. Price action at 85, even during the month, 88. And decision candle, buyers pushing it up, sellers pushing it down. And after that, it has a tendency to want to go back towards the 12-month moving average. It could either do it two-way, either a sharp pullback, which is kind of deconstructive, could hurt sometimes, especially if there's a high volume on that pullback candle. Or it could do it in a soft landing manner with just month after month, just dragging it down just a little bit, or even sideways move. And as long as you're not going up, you're actually catching up to the 12-month moving average. And when you get close enough, well, you either bounce up. Look at that here. See, probably didn't consolidate enough. Go up. A nail. Went all the way to 100. Buy and seller said, eh. And after that, hard red candle. See, on the monthly, that's a big red candle. On the weekly, you'd have to look at the volume on the weekly for that particular candle. And if it was high volume, that'd be a warning that you need some time to digest. Buyers coming to sell the show, save the show right here. Closing above 12-month average, but the next month, no, didn't want. And after that, you want to be out. These are monthly candles. So you want to take your profits. You want to enter when the 12-month average starts going upwards on a breakout. Probably here would have been an ideal time to go in, and you would have been in from 1st of March 2010 all the way until you close right here, until you close below the 12-month moving average or below a previous low. If you're doing the trader's way, low that goes back up to previous highs, you put your sell stop there. I see it matches pretty much with this one here. Or the other technique is a valid trend line violation with the 3 points, and on the 4th point, you're out. You could apply stage analysis to any time frame. I'm doing it now, practicing it on the 12-month moving average. But where I'm applying stage analysis, I'm going to do the Stan Weinstein way, is on the weekly chart. What I'm going over on the monthly is my classic chart trading framework to see where the trend is, where my horizontal breakout lines are, and right now that's at 228, 228, yeah, 228.50. That's pretty much that resistance right there. And the support, where's the support? Wow, down here. I have the support here. So this is where it could drop on the monthly, guys. Depends where the 12-month moving average goes. So I could see the price action maybe hitting the 12-month moving average and then going to test back up. And then would get some, I'd have to move my support line. We're starting to define some higher support. So eventually maybe the support line is going to be here. But right now it's down here. So we could easily close below the 12-month moving average. Test maybe that a few times and then move up. But remember what that means, right? If you're below the 12-month moving average, you don't want necessarily to short it, especially if it's angling upwards, but you don't want to be in the stock. Because as soon as you're below it, you see, even if it starts angling upwards here, you're below it, sideways move, and all that downwards pressure, all the price action below the 12-month moving average is going to actually bring it downwards. And after that, you might start building a trend. So you want to get out here. When you violate it, let the market figure out whatever it wants to figure out. Either you short or you just wait out and you wait until the 12-month average starts going back upwards, and then you have a buy signal once, but you save all this time. And who knows, that could have went way deeper. 12 months, I don't think you want to hold your money in the losing trade for 12 months. Just not it doing higher highs. If your stock's not doing higher highs regularly, it's a big warning sign. So this is how I send the monthly. Still in an uptrend, pulling back. We're going to zoom in on the weekly, and we're going to see the health of that pullback. It's been in stage 2 for a while, outperforming the SPX. Going up. It was actually a nice, during that October month, actually performed very nice. But now you see this, we're out of October. And hold on. Let's remove all this noise. Right here. And look at that. Ooh, I do not like that red candle right there. That is a warning sign. The week is ended. That is a warning sign. Still above the 12-month, the 30-week moving average. Still in the stage 2 uptrend. We don't know. I don't know. We're going to have to wait to see next week. But you're still doing higher highs. Higher lows. But this is not what you want to see, especially this candle. We've seen it with the, anytime you have that means you have some time to digest. Down candle below the 30-week average on these 3 candles. You still have some Ichimoku cloud defined support acting up. You still have the 30-week average angling upwards, wanted to drag you up. But instead of skyrocketing, instead of the next following weeks going higher and higher, you have some time to churn. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It took 12 weeks to recuperate from that violent red candles, guys. And dangerous territory. You don't want to be there, close to the 3-week average or under the 3-week average. You always want to be above those pullbacks. You want to always stay above the 3-week average. Not too far away because you're going to get pulled down, but far up on top that you never challenge the trend. Apple. Still stage 2 uptrend. Big warning sign here. Doing the Stan Weinstein sell stops. Usually it's you could even maybe been triggered out here. Pullbacks. Price action goes back up. You could actually probably had a sell stop right here. And you could actually, you see it usually on the pullback on indicators. When a V-shape underperforming the SPX, usually the price action goes down. And when you start going back up, outperforming the SPX, usually the price action goes up. And when you're close to or equal or above the previous highs, the traders will move your sell stop. So you would have probably sold the following 1-2 weeks. That could have been an exit. Investors way, well, you have the sell stop under 30 average. And when you get close to the end, no matter what happens, if you have a close below 3 week average, you're out. Do I have a valid trend line? 1, 2, 3. Break on the 4th, even here. So now you have another reason to exit here. So all these techniques, they usually give you a sign that maybe that the stage 2 ends ended, but that you're entering a consolidation period in the best case, and you just don't want to hang in there when the stock is not continuing doing higher highs. It's actually slowing down. You want to put your money in another stock that's actually doing higher highs at a better frequent base, giving you more return for your time that you're in a stock than just praying and hoping that Apple will do something and there's a miracle and Trump and whatnots and all that noise. So forget the noise, use your tools. Warning signs, red candle, warning signs, trend line violations, warning signs, going below a previous low. They're all adding up, guys. So not super duper good. If you really want to wait for the final exit sign, just wait for that close below that 3 week average. So that's it. Until we go back and beat those previous highs and let whatever Apple has to do as a sideways move, whatever it's going to do here, until it goes back here and close above that 230 level. For me, it's a abstinence. All right, guys. Thanks. Don't forget to subscribe.